Well, welcome to the fun and mentals of real estate. I think we may have a little bit of fun today.
I hope so.
But I say that because Glenn wanted our question of the day to be, is Glenn awesome?
Why is Glenn so awesome?
I think we're... Yeah.
Why is Glenn so awesome?
Why is Glenn so awesome? So
It's
Glenn
humility.
is awesome, but it's not our question of the day. Our question of the day is the lowest rate, the lowest interest rate you can get, always the best loan scenario? All right? Okay. I'm Angela Dillmon here with the Dillmon Group at Keller Williams Realty Chesterfield. And these are our wealth building partners.
Glen Calvin at Gill Mortgage in Chesterfield.
And Josh
Back
Gulledge.
again.
And Josh Gulledge,
Yes.
our excellent buyer's agent, who's here again today with our story that we're continuing with John, our first-time home buyer, right?
Yep. Mm-hmm.
So, okay, we've gotten John to actually talk to the lender, and Glenn's run the credit. He's looked at his income. He's looked at what debts are held against him and what not. And if you want to know what's not held against him, okay, listen to last week's podcast. That's all I'm going to say.
And I'll say this,
All right.
I listened to him a lot too.
Yeah, and you listen,
Yeah,
all
I
right?
did,
And
and-
so we get through this, we get through the initial conversation, and now one of the most important reasons to talk to a lender first is cash to close.
Right.
Right now we know what our comfortable budget number is. We've backed into the sale price, but now we got to deal with the cash that's needed to buy the house, right? So that's really important in a loan estimate. So Josh, how do you explain a loan estimate to a buyer?
Yeah, so again, a lot of times buyers, they run their scenarios and they are saving for a house. You'll hear that all the time. And when they say saving for a house, it's always a down payment or cash in their bank account, right? That's pretty
Right,
standard.
sure.
And so it just comes down to me asking questions of, again, Guild and Glenn have probably the best loan scenarios out of most major lenders that I see. It's
And
very,
the
very
loan
clear.
estimate that we talked about is going to come later when we send the application out. Usually we call it the loan scenario.
Okay.
And it really, I do love the one at Guild, and I wish I would have invented it, but somebody at Guild did, but it really breaks it down concisely.
Yeah, so how do you
so
explain
that,
it?
So that
what it
loan
is?
scenario, it's, again, lenders can sometimes make it over confusing because there's so much on it. But again, the loan scenario that Guild has, and the reason I like it is I make it very simple for buyers to understand. It is how much, and then again, it's on there. How much is your monthly payment?
How much about the
How
bid?
much cash out of your bank account is it going to take to buy that house?
Okay.
And what the interest rate
And
is.
what's my interest rate? And of course, interest rate, monthly payment go hand in hand, right?
They do.
The three most important questions this loan scenario is going to answer for you. It's also how we compare lenders,
Yep,
right?
Exactly.
And so if you don't have this, you can't compare the lenders. You can compare interest rates, and that's kind of part of the question of the day. I found that over my 35 plus years of experience, people will call one lender and say, what's your rate? And the other lender, and what's your rate? And they're ignoring how much cash is needed to get that interest rate. And that's an important part of this, right?
Yeah, so that's definitely one. And again, on a side note too, it's sometimes they compare lenders on different days. And you really need same day, as close to same time, but that way the rates haven't changed, so you can get apples to apples. And then even from there, so let's just say they did call lender A and lender B at the same time. They both sent me loan estimates. And again, I can help look at it and analyze it for the buyers and just say, hey, this lender's giving you a 6.75 interest rate. This lender's giving you a 7. But this lender's charging you $2,000 more than this lender.
Oh, that's
So
common. Like one guy's got $7,000 needed to close, and the other guy's got $9,000 needed to close.
Could be close to 9 or 10.
And so he's really just buying the rate down.
Yeah, so then again, I can help you compare and say, hey, you probably, if you want a true comparison, if there's no, and which we'll talk about later, if you just prefer one's, abilities and personality and, behind the scenes work, which Glenn can talk about as well. But it is, hey, go back to the lender that's got the better rate, that is charging you more money.
Right.
Or the one that's cheaper is typically you say, hey, if I upped my cost to close, could you buy that rate down? Sometimes you'll find that
Do the
their
same
rates
thing.
are even cheaper.
Yeah.
One of the things that's different about buying a house and buying a refrigerator or a car or whatever, and the reason we're doing an estimate is because you haven't picked out a property yet. So we're estimating the taxes. We're estimating the insurance.
Right.
We're giving you the interest rate on that particular day. And what Josh and I like to work and why we work so well together is he'll call me, or the borrowers will call me and say, hey, today I'm going out to look at this property. And we'll send him that scenario with those taxes, that day's interest rate. And then the only thing we're really estimating would be the homeowner's insurance.
Yeah.
Right.
So again, that goes back to comparing apples to apples.
Right.
And I see them all the time. I help buyers a lot, and I can quickly say like, hey, this lender's saying your monthly payment's going to be cheaper, but he has way underestimated your taxes and your insurance.
Right.
And again, with Guild and Glen, I specifically have Glen overestimate typically. That way I can get your payment better, and we plan for worst case, because I don't want you to plan for a monthly payment and then be surprised in the end. So I really try to make sure that they're not undershooting on both sides. I try to make sure it's as level of a playing field for you to get a true comparison and make sure there's no surprises in your monthly payment or your cash to close changes a lot.
All right. So this loan scenario is really broken down to about 4 parts. The very first part you see are the lender figures.
Right.
Everything else is not the lender. Everything else is title insurance, homeowners insurance, real estate taxes, which are all
Recording
estimated.
fees, right.
Okay, so the very first section of this loan scenario is where truly you compare lender to lender. So what's in that very first part? Just a real quick overview of the lender charges in the very first
So it would be any origination or discount points, which would mean fees that we're going to use to buy that interest rate down. Or maybe it could be a certain program requires something like that. And then it's going to have the lender's fees, their underwriting, their processing fees. And they're going to be right there in the first column.
Right there. And that's where you compare a lender to a lender along with the interest rate.
And I still like to, when I'm on the phone with them in that initial consultation, to walk through that whole scenario and just kind of tell the story. And it's probably, we talk about this all the time. It might be overwhelming, but at least it's introduction and you understand about what the title insurance is for, recording of the deed of trust, setting up the escrow account.
Right. So that's a conversation Glen has if you want to get in that much detail. But again, this loan scenario, interest rate, cash to close, what's my monthly payment?
Right.
The second section is estimating real estate taxes, title insurance, homeowners insurance, mortgage insurance if you're putting less than 20% down. And so that will come up with how much do we need to put in the escrow account. And there's always a 2-month cushion in there. So those are estimated. And Glen uses really great estimators. He tries to be really accurate and a little on the high side, so we're not surprised. Then the third section is what, Glen?
Third section is the monthly payment, right?
Okay, it's the monthly payment breakdown.
Principal and interest, taxes, insurance, mortgage insurance, what that total monthly payment is. Yeah. And then we're going to talk to, a lot of people don't realize this either, that we would close in November.
Right.
My first payment isn't going to be until January 1st.
Right.
Your first payment is always going to be
at least 30 days.
Right. It's always the following month after you close.
And in that third section, this is a common mistake that I see on lenders is that's where it goes into your credits and grants. And so like if lenders have programs, and so I have seen some estimates that, again, and I don't ever pretend to be a lender, but I can quickly kind of see like this seems off because I've seen so many of them. And I'll be like, why is this cash to close so different? And I'll see a $5,000 seller credit on there. So of course the buyer sees it and says, oh, this lender's saving me $5,000. And sometimes I'll call that lender and be like, why is there a $5,000 credit on here? Like, we don't have the house picked out. I don't know that I can get that on every house. So he's already limiting buyers on their options or giving them false information with.
Right. And then all of a sudden, when they do pick a house out and go to closing it, it's $5,000 more.
Find out it's $5,000 higher, and that's not going to be a fun call for them. And
that's right.
And again, I try to do a very good job to know on every house. I like to show people what their monthly payment is going to be.
Right.
How much cash it's going to be out of their bank account at the end. Like, hey, this is what it's costing you to buy this house.
Right.
No hidden fees, I always tell people. And what is the house actually worth? You're paying $300,000 for this house. Is it worth $300,000? Is it worth $315,000? You got a great deal. So I try to make sure that they're super comfortable on those 3 numbers, and by doing that, it just gives people that sense of ease, and they know that they're not making a bad decision.
Going back to John, we were able to win his because he really wanted a low monthly payment. We were able to switch him to an FHA loan and then go through the MHDC for first-time homebuyer program, even though he didn't take the grant that particular time. And it comes and goes, but they had an excellent program and excellent opportunity.
There you go. So what's a common pitfall that people do that, when they're thinking about the price of a home that they want to buy?
They'll say, I'm not going over $200,000.
Right.
Yeah, I'm buying a house at $200,000.
Right.
We were talking about this earlier. We can show people that a house at $215,000, the payment might be less
because the real estate taxes or the insurance might be less.
Yeah, so
Or-
this is the scenario I use, and it's a real scenario. It was a buyer, and they were looking at a house at $250,000, and I found them at $265,000, which was better in every way, even more so than it wasn't just 15 grand in upgrades difference. I mean, it was tremendously different. Had a brand new roof, brand new HVAC, brand new kitchen. And so and then taxes actually were a little bit lower than that. And because the savings on the insurance on the roof, especially, like their monthly payment was $10 cheaper than the $250,000 house that had an old roof, an older kitchen. Still it had some nice features, but again, it wasn't as good of an investment. And when we're talking building wealth here, it was a much better option. So just try not to limit yourself on the sales price. It does come down to, again, the two big ones, monthly payment, cash out of pocket.
Right. And cash out of pocket is affected by the age of the roof these days because it affects your insurance so greatly right now. So there are a lot of factors in this estimating homeowners insurance.
It could
right
be
now.
an extra $100 a month.
Yeah.
On your insurance.
Yeah, if you have a 15-year-old roof versus a new roof or something less than 5 years old.
And the other thing is, the one great thing about mortgage loans is we're stretching that debt out so much.
Right.
I think an extra $10,000 is probably not going to affect that payment more than
$7 a month, basically.
$70, right? Yeah,
right.
That's
It's
my
like
rule of
between
thumb.
$6 and $7, and $7 is on the high side. So for every 10 grand more, it's like $70 a month. So you'd be surprised at what $70 a month can buy you in a house, or especially first time. Every 10 to 20 grand that you move up is amazingly different in a house. Wouldn't you agree, Josh?
It does. And again, these loan scenarios are great. Every lender that you talk to, if you are really seriously considering them, you need to get that loan scenario because it's the way you can compare and make sure that they haven't made a mistake. They're not pushing you into a product that's more expensive. They didn't misjudge your income. Like it's a way
we had that
to,
recently with a buyer.
It's a way
that
to really
misjudge the income.
Really compare and make sure that it's you're doing what's best for you.
Yeah.
And again, by doing that, you don't have hidden fees and surprises.
And the other thing, in looking at that cash to close number, and we spent a lot of time on our first time homebuyer seminar, is how to come up with it. There's a lot of different ways to come up with the cash to close.
Yeah,
there's gifts, there's 401k,
401ks.
There's savings, sellers paying the closing costs, grants. But to know what that number is, now we can strategize on
how to get there.
Yes.
Right. I can call grandma. I can call mom and dad, right? I can see if I can find a house off market or something that's been sitting around where I can get a credit from the seller for closing costs, right? And so I think, Josh, usually you just say, hey, how much cash do you have to buy a house? What do you want your monthly payment to be? And let's go talk to Glenn and then strategize how we can make all of that work for you.
Right.
Right. So hopefully you had a little bit of fun today, probably a little bit of mental because it's numbers as always.
Yeah.
But I think our fun is that we found out Glenn really is awesome. What do you think about that? All right. Super good. Well, thanks for joining us today. Next week, we're going to hey, what happens after we get done with this loan scenario? And it's time to talk to Josh. And we're going to explore what that conversation looks like. Until then, have a great week.